Hey guys, welcome to our charting video. So I want to gear this entire course to new traders. There's a lot of people that want to get in the markets. They aren't sure how to start. One of the most important things you can learn to do is chart a stock, especially with active trading. With investing, you lean more toward fundamental analysis, which means what's going on with the company, revenue reports, earnings per share, different streams of revenue. But when it comes to active trading, you want to know how to read a chart. You'll hear a lot of terms out there, moving averages, RSIs, support, resistance. To a new trader, that can be overwhelming. So I want to offer you a very simple way to learn how to read a chart. The most important part about charting is understanding support and resistance levels. Support and resistance levels are price points established on a chart, and resistance would be a high point that the stock is having trouble going above. Support would be a lower price point that the stock keeps returning to, but it seems to be holding. So when you hold support, that means that you have an entry point for a play. If a stock has been holding a support level for a long time, that means the support level would be stronger. So you could feel more comfortable about entering a play off that support level. Now, your resistance levels are important because when you're looking for an exit on a play, you want to exit before you get to resistance, or at least scale out of your position. Resistance, if we do not break, we will bounce off of, meaning we will come back down. Support works the same way. We hit a support level that we've been holding for a long time, we will bounce off that support and come back up. So this is where you start to learn how to enter and exit plays correctly. So the first thing I want to look at today is the Lucid chart, LCID. I'm using TradingView for this. They just turned to LCID. They were CCIV. That was their ticker, and now they're LCID. But if you look at my chart, there's a lot of orange lines. So I'm using TradingView. You can come up here on the indicator tab and add indicators to your chart. This makes it easier for people still learning to identify support and resistance. You can also add the EMA and SMA to the chart. I have those indicated as this blue and orange line. The 30 EMA is the exponential moving average. It is showing you how the stock has been moving, what price range it's been moving. The SMA is a simple moving average. The 30 indicates it's over the past 30 days for the EMA I have on my chart. The 50 means it's over the last 50 days. You can look at moving averages for just about any period of time, all the way up to a 200-day moving average. So typically, when a stock is trading under one of these moving averages, that's something to keep an eye on, especially if you're in a play and a stock moves under the moving average and closes there. You could definitely see some downside from that point. When a stock has been trading under the moving averages and crosses over the moving averages back above, or is starting to cross over, that would be a buy point, because once you move over, you can see upside after you've crossed those moving averages going up. Same thing with going down, though. You cross them going down, you're probably going to see downside after that. So let's break down this chart. Right now, if you look where my mouse is, I'm looking at the 6-month chart. Charts establish support and resistance every day. So if you hear someone say the daily support and resistance, they're talking about looking at that chart for that day. You open up the stock, whatever the stock's doing for that day, it's going to establish support and resistance levels. You also have weekly, you have monthly, you have 3-month, 6-month, yearly support levels. So when you're charting a play and you're trying to find a good setup, you want to check all these charts, because the further out you look, the easier it is to find levels that have been established and they're holding. If you base a play just off daily support and resistance, those could break very easily. You could establish daily support levels on a chart and it could hold for 4 or 5 hours and then break and the stock moves down. Same thing with resistance. A stock may test a new resistance level, establish it on the day, and then break it before the end of the day. So you really want to be looking at the chart further out. I do check the daily, and if the daily is looking well and I've identified my daily levels, then I'm checking my weekly, my monthly, my 3-month, 6-month, so on and so forth. And doing this will help you identify your best entry and exit for the play, or if it's even a play right now. You may be dead in the middle of support and resistance. You're not sure which way it's going to go. So you don't play it until we reach one of those levels. This is how people swing trade. They look for these support levels, they enter, they exit before we get to resistance. Same thing with options. You can buy an option on a stock that's been sitting at a 6-month support level, look for the resistance level that it's going to have to hit, and buy your option accordingly. So right here, we actually, for the week that I'm recording this, we called a LCID option on Friday. It is Monday while I'm recording this. We saw that since March the 10th, we've been bouncing around supports at the 23, 22 range, 2250. And we stayed above those supports for a little while. We did dip down and we went below our moving averages, and we ended up coming down to the 17 range. So this wasn't playable right here. We waited for us to come back up above the moving averages. We came up to 26. We fell back down to a support level at 2250. So if you see on June 23rd, we were at 2250, but also all the way back in March, we were at the same range. It doesn't have to be an exact price point, but 2250 to 23 range. So I'm looking that we were bouncing off that support we've been holding since March. Right now it is July, end of July. So we came off of that. We were able to we moved into our moving averages. We came down a little bit, but here's the thing. We, again, came back to that same support level. So we called this play on this stock because we noticed that we were holding this support level at $22.50, $23 range. So we called it. And now if you look, as I'm shooting this, we're at 26.45. When we called the play, we said that we could see 26 to 29 range this week. We hit 28, over 28 earlier this morning. We've come back down a little bit, but likely we're consolidating a little bit lower than 28, and we're going to see more upward movement. But anytime you're looking at charting, you want to identify support and resistance. Let me click on the 1 month here. On the 1 month, you have the same thing. You can identify them across the board. So on the monthly chart, we had these support levels, the 2350 level. This is the one that we were watching, the 22, just above 22 range, that we were able to stay above all month. For the month, we have resistance up here at about 28.96, so $29 resistance. And what we saw today was the stock moved up off the supports, and it tested all the way up to 28 and change is where it actually ended up going. But chances are this resistance is what caused it to bounce down, and now we're at the 26.55 range. So you normally would work this from going from the daily to the weekly and so on and so forth until you have an idea of what's going to happen. So we've already looked at the 6 month. Let's look at the year. So on the yearly chart, we still got these support levels at 22. We are trading right on the moving average. We've gone just above it here on this last candle. So what would happen if we continue to go up and we manage to break 28.5 range resistance? Well, we got to look backwards. We go back, we had that same resistance all the way back to around March 17th. We had another resistance line at 27.29, and we broke that this morning, but we came back under it. So now we're looking at price points that we're going to have to break moving up. If we are able to break these couple of price points between now and 30, what my yearly chart's telling me is that we could see a move to the 35, 36 range. Now that could be a little more difficult to break, but let's keep charting. If we were to break that, we had a run up all the way to 63. I'm not sure that we're going to make that run up quickly like we did here, but what I could see happening is we break 36 range, go to 37. I think we'll consolidate in the mid 30s for a little while before we gradually see movement into the 40s. But again, it's knowing all of these levels. So if we were to bounce off here and come all the way back down to the 22.5 range, where do we go from there? Well, on the past year, you see, I don't have the lines here, but you see we found a bottom here at 17.5. We found it again on April 20th, right around the 17.5 range. And then all the way back to January 20th of 2021, we were around 18, 17.5. So if we do break and go down from here and we break that 2250, we could see the 17.5 range. So if I wanted a sure entry point, if I saw it go to 17, I'd probably be buying in. Anything below that, we're in danger zone of going down to the 10. I don't think that happens. I think we stay above 17 and we trade between 17 and our high of 60. I think we're going to see gradual movement up, though. I think we'll see the upper 20s to 30 range this week. But let's keep charting. So let's look at the SPY. This is the ETF. It tracks the S&P 500. Another one, I like to pull plays off the SPY. So how would we chart it? Well, let's look at it. So I would probably just start at the 3-month on the SPY. You have a lot of different levels here, but if you notice, we are on an uptrend. We've had a sell-off here or there, but overall, we're trending up right now. The SPY is at 440. I want to say that is new all-time high. Let's look at the chart. Yes, so we're at an all-time high level. So let's go to the 6-month. What I'm looking for now is we're eventually going to hit a top here. We're going to find resistance somewhere up here. And when we do, the likely play would be a bounce back to the low to mid 430 range because of the support level. This support level, if we'll get a pullback because this tracks the index. So when we get the pullback, we could be looking at 433. So you could put it, when you see it bounce off the 440 range, you could play a put option, which means we're betting against the stock. And we could put it, if we think it could go to 433, we might buy a 435 put strike price. When it does come down, then we reverse. If we see the 433 levels holding, then we would buy a call option or shares and ride it back up to the 440 range and see what happens. It may bounce again. But this is how you chart stocks off support and resistance. If we were to break the 433, let's say we have a couple of days of selling off, then we find our next level down in the 428 range, and then we'll be heading down to the 425 range. So these are levels that we're watching right now as the stock's moving at the 440 range. Downside again to 433 if we were to break upper 420s. If not, we're going to have to watch and see where it goes for all-time highs. That's the thing about stocks when they're making all-time highs. They're going to find new resistance, and you've got to be watching for what it's going to be. Let's say we enter a correction on the markets. Now, how do we play SPY? A correction means we're selling off, and we're selling off hard. We're going to see at least 10% of a sell-off. So what I'm thinking is we would break the 433, we would break the 420s, and then I'd be watching the 422 level because this is a little bit longer of a period that it held. And if we break that, then we're going to come on down to the 415 to 417 range. And I think this would be the bottom if we have a sell-off, 415 to 420 probably, because we did consolidate here for a while. If we were to go lower, you might even see 410 to 408. But likely with a correction, we're going to come down to the 415 to 420 range. And that would have to be an actual market correction for us to go to those levels. Outside of that, the SPY is likely going to find a new all-time high, consolidate in the 435 range, maybe go to 433, and then bounce back up. And we'll probably see more highs as long as the market keeps doing well. But again, this is what we do every single day on charting. It's simple. It takes time to learn, but it's simple. You want to look for those high price points and low price points. Imagine if all of my markups were not on my chart. Let's take them off. I'm going to get rid of the support and resistance. I'm going to get rid of the SMAs, and we'll keep the simple moving average because it's not too cluttered here. But how do you do this on a chart if you don't know how to use TradingView and you don't know how to add the indicators? Well, again, you're looking for those common price points at the top and at the bottom. We have common price points here. So there's a little bit of support levels. It looks like it was about a weekly support. And then if you follow it back over here, you'll find that same range, 404 to 406 range. So this would be a support level. It's common price points at a bottom. And then we bounced off 414. We also saw the same range right here. So we have 414 support. 428, you see these common price points across right here. That's a support level. We see a top here. This was a resistance level, but when a resistance breaks going up, it becomes a new support level. That's why I think we could come back to it. But you're just looking at the top price points on a chart across where we have common. That means that we have to hit that same price multiple times or within the range. Same thing with support. We're looking for that common price point that we've returned to over and over. And this is how you begin charting. This is how you learn support and resistance. This is how you learn entry and exits. We can look at one more chart without any of the markups. and I'll show you what you do if you're just using your brokerage app on your phone and you need to quickly identify. So we're going to look at Boeing. I'm going to go out to the 6 month again, because when you're really looking for setups, you want the longer time period. You want to zoom out. We're trading at 423.87 right now. If you look right here, we have support levels at 420. And then here we have confirmation that 420 levels, 421, we consolidated here, which just means we traded sideways around that number. So if we were to break the 220, 221 range going down, then we could really see some downward momentum, probably down to 208 to 210 range, because we have the stock bouncing off 208 right here back in February. We saw 208, 207, 206 range really just a week ago, and then we were able to come up off of that. So we bounced at those levels. So if we were to sell off, I would think that we would break the 220 and sell off down into the 210 lows, or maybe even 208 range. So if I saw Boeing hit 208 levels, that would be my buy signal for shares. Or if it looks like it could be holding really well off that support, then I might call it up. I wouldn't go too high on my strike price. If it was at 208 and I saw that it held there for a while, I'd probably do a 212 call, maybe 215 tops with a 30-day expiration. And I would be looking for it to bounce off that support level. Now at the top, if we were to run up, Boeing has been trading at a pretty wide range. Right now, we are sitting right on the 50-day moving average. We need some momentum to get back above it. But if we do break above it, then 227, I know this was a support level when we were above it, but now it's become a resistance level. So 227, we've got to break. If we break 227, we could probably go back up to 230, 232 range. And then, of course, if we're looking at how high can we go, we were at 257. We found resistance there across the board all the way back in April and in March. We would have to break 257 to see the 260s again. But this is what you do. You look at the charts, you find the common low points, common high points, and you start determining support and resistance. Once you're able to do this, you're able to find setups, just like we did with Lucid Motors. We found that it was holding a common support level, and it's been holding it, and we've seen it hold it in the past. So we called it off of it, and those call options ended up making hundreds of dollars. You can do this for yourself. Again, if you're new, I highly recommend just adding the support and resistance levels to your chart. It makes it so much easier. There's a lot of different options on here. So I've got my SMAs added back. I'm not going to add back my EMA right now. I like my simple moving average. It gives me the information I need. But in a nutshell, this is what charting is. You can talk about RSI. You can talk about the MACD. You can talk about a lot of things. But when it comes to truly understanding price action and what's going to happen, learning your support and your resistance is what you need to do to get off the ground and get ready to call your own plays, understand your plays, pick good exits and entry. So I want you to start practicing this. My DMs are always open if you have any questions about it.